Hello and welcome again to the Property Sisters YouTube channel. We've got Michelle Dean here again, who's very, very kindly going to answer some quite tough questions, I would say, this week. Peritus Finance have been a really great company for us, sponsoring our events and answering these really difficult questions for us. But I just wanted to stress this is nothing to do with any of the problems that they're having. These are questions from outside, as it were, from different brokers, etc. But Michelle's kindly going to try and answer some of them for us. Some of them may be a bit generic because we don't have all the detail, but we do have some fantastic questions for you. So let's crack on with it. Yeah. So the first question I've got here is, what are the most common objections from lenders right now? Why are people struggling to get finance?
Yeah, it's a really good question, because what we're finding at the moment is that borrowers' aspirations of what they can get for finance, both development and bridging, aren't actually aligned with where the lender or the lender's underwriters are, which is mainly driven by COVID. So it's not uncommon. We've got lenders capping out at, say, 60% on developments. I've got a lender that will not go above 50% for all bridging, and they were at 70% pre-COVID. So lenders are looking for borrowers that have completed a number of schemes of its development, strong A&Ls, liquid locations. They're almost looking for the perfect borrower, but pricing at market risk. So the days of 70% of GDV, 90% of costs on development, 75% bridging, almost no questions asked, are gone at the moment. And what I'm really coming up against is what the clients want against what the lenders will give them, and there is a disparity there. That's for sure.
But what you're saying is it's better than we were 3 months ago, when the whole, in the midst of COVID. So yeah, we can say that it's easing, but it's just we're not back to normal.
Oh no,
it's not. And I don't think we
will be. I don't think we will be for a number of months, and I think we have to accept that the new normal means that people will have to put more money into the deal for lenders to want to lend. I think they'll come back. I think we'll get 70% of GDV, we'll get 75% on a bridge. I think that it will happen, but it's not going to happen anytime soon. And for as long as they keep the loan to values down, they will still insist on good quality individuals that they're going to lend to.
Yeah. And this leads into my next question about, good quality individuals, what the most important thing to show borrowers: affordability, skin in the game, experience. These are really, really important right now. That's what you're kind of saying, isn't it?
Absolutely.
Never been so important.
Experience is key. We had a number of lenders that would do first-time developers. They're not doing that at the moment. They are looking for experienced developers. They're still charging the rates that they would charge, but they still want experienced developers. Obviously, looking at your profit on cost, an exit strategy that is in line with current values, not in line with what you think you should be able to get, but actually in line with what people are paying. And evidence that you're a good party to work with. So not just you, but the people around you. Who's your contractor? Are they a good party? Have you done your due diligence on the contractor? Or have you just gone with a nod that this contractor is the right people for you?
Because they're all going to be red flags for the lender. I mean, you suddenly put in a rogue builder, red flag, we're not lending to you because you obviously don't have the right experience.
That's it.
Are there additional charges that they're starting to throw in now that they didn't have before COVID? Are there additional charges? Do you know of?
Not that I've come across. I mean, there are the usual charges, and then you need to obviously always look out for non-utilisation fees, commitment fees, that kind of thing that will be in the contract. And if you're not going through a broker and you don't read the offer fully, and maybe your solicitor doesn't go through the offer fully with you, you might miss that kind of thing.
Next question is fabulous. It is, when is the deal done? We're getting a lot of the property sisters are saying, we're having finance pulled the day before completion, when everything's agreed, all the terms have been agreed, you know, when is the deal done?
Okay, so in the majority of cases, the deal is done when the formal offer is produced, because that's the bank's way of saying, yes, we agree to lend you this money subject to a clear report on title and the solicitors confirm and we can complete. So we've overcome all the hurdles by then. However, COVID hit and a number of lenders closed down and any offers were not fulfilled. And there were a number of clients that came to us and said, we were with this particular lender and we can't get finance, can you help us? So obviously we've tried our best to help them. But in normal circumstances, it's when formal offer is produced. But saying that they can withdraw funds or withdraw the offer right up to the day of completion. But they would only normally do that if there's a fundamental reason for doing it, if the title isn't clear or something like that.
But all that stuff should be sorted before exchange, shouldn't it? Clear titles and...
Not necessarily. You'd like to think so, but some people exchange very early on the hope that everything's going to be okay. It's a really hard one, but you know, you do have to. In today's market, I'd like to think that right now it would be at formal offer, but 4 months ago it wasn't. It was up to the day of completion. Things are getting a bit better, but...
Have you stopped working with anyone? Sorry, this isn't on our sheet, but is there any kind of lenders that, you don't have to name them, but are there any lenders that you've stopped working with because you feel that they're kind of showing bad practice or...
not you know, bad practice, but we've stopped working with a couple of lenders because their loan to values are just too low. And we can't put business to them like we used to be able to, because they're just not lending at those loan to values. So in that respect, we've done that. Other than that, no, we don't normally deal with lenders that have bad practices. We normally deal with ones that are that we know that we can work well with. So no, we haven't.
That's good. Do you go fixed or variable rates right now, and kind of what length of year as well? I think that kind of goes in the same bracket as well.
Yeah, okay, so the majority of development loans are fixed. Fixed is a good option, I think, right now, because who knows what's going to happen going forward. I mean, interest rates are at an all-time low. You know, there are some fantastic rates out there, and I think that fixed rate is probably the way to go, depending on circumstances, obviously. I mean, bridging is variable in most deals. I don't think I've come across a fixed rate for a bridging loan. I'm racking my brains, I can't think of one. But development, you're probably better going fixed anyway. And term wise, if you're thinking about a term loan, then I would say, if you're looking at a buy-to-let or HMO or something like that portfolio, the longer the better. You'll know exactly what you've got coming in and what you've got going out, as long as your tenants stay. So in that respect, that gives you a really good move forward. So if you can get a 5-year fix, and there's some fantastic 5-year fixed rates out there at the moment, then that's what I would go for. But obviously everybody is individual and everybody has their own needs, and maybe you need a 2-year or a 3-year or even longer to give you some stability, and they're all out there.
Do you find, next question, do you find that the lending teams are a bit short on resource at the moment?
Yeah, I mean, that depends very much on the lender. If you're talking about development and bridging, then that's different to long-term funders. So yeah, I would absolutely agree. These last 4 months have been very interesting in trying to get quick responses. And I do think that people are doing their absolute best. There've been people who have been furloughed. And so the lending teams that are working from home are having to do much more work. And so we've had to kind of accept that service standards will slip. It will take longer. And I think that's where using a broker comes into it, because we can be that middle person that keeps chasing the lender and finding out what the timescales are and updating the client with that. So yes, but things are slowly getting back to normal. Offices are starting to open up, not all of them, and a lot of people are still working from home. But at the end of the day, as long as they get the deals done, I don't mind where they work from, you know. But and as long as they tell me if it's going to be an 8-day turnaround from an AIP, and I know it from day one, that's fine. But if I get an email back saying thanks for your AIP, we'll contact you in 48 hours, but it does take 8 days, that's when it really annoys me. But most lenders are good in that respect.
This is a question I ask you every week, pretty much. Mortgage holidays and bounce back loans, is it creating a negative effect for us developers, or are we okay still? We're okay.
No, you're fine. You know, a negative in what way?
Well, lenders want to know why you've taken them out, or, you know, it's obviously affected your business, so you can't be doing very well. We're still okay with them.
Absolutely.
I've just seen a couple of YouTube videos just recently with people scaremongering about them.
And I think that's exactly what it is, because the mortgage holidays are there for that exact reason. If people are on reduced income, then take a mortgage holiday, and the bounce back loans, it's only up to £50,000. So this isn't a huge amount of money that people are taking. And the fact is that people need it. So no, that as of today, I haven't received any bad press or any feedback that having either of those or both of those would cause you a problem.
I'll keep asking, but we'll
please do, because it might change. I mean, I don't know.
Exactly. Valuations being unsubstantiated, and rents being downvalued, even though when you've got ASTs in place, what are you finding?
I can only be very general on this one. I don't understand how valuations can't be substantiated, because they have to provide comparables on their reports. So I'm unsure how they can be unsubstantiated. And if there is an AST in place, unless it's an AST that is either very new, and it is completely out of line with what you would expect to get, then I don't understand why they wouldn't take an AST that is in place.
I mean, I think we had problems with an AST before, but the renter hadn't moved in. It was in the future. So what the valuer said was, well, they haven't moved in, so essentially you haven't handed over the keys, so you haven't got that contract in place, so you can't accept it. So now I make sure that my renters move in before I get my reval done. So we've got another question here about lenders not releasing drawdown funds in a timely manner, and I think that's quite specific to a specific case. I mean, have you ever come across this?
No, not really. I'll be honest. Lenders are very aware that when a developer asks for a drawdown, it's probably because somebody is knocking on his door saying, "Can you pay me, please?" So they know it's important to get funds out quickly. Now, all I would say in the lender's defence, and I have no idea who the lender is that they are relying normally on a valuer or a QS to go out and report. And if it's been in the last 3 or 4 months, then that's probably proved exceptionally tricky. Now, I know there's been a lot of lenders that have accepted pictures of sites and a kind of FaceTime walk around the site, show me what you've done. And lenders have been really trying hard to ensure that they can continue to draw down. But I don't know how to actually answer your 2 questions, because it's not something I've come across even during the last 3 or 4 months.
The deal's not done till completion. So, you know, if something extraordinary happens, it could affect, you know,
absolutely,
what is going to happen, because the deal's not done until it's done, right?
No, that's right. And we can't foresee what the lender will decide to do if they have to
Yeah.
make a change to the initial offer.
Yeah. Yeah.
And on this case, I think that, let's say it was a 12-month term and they said, can we
Yeah.
push it to 14 months? And by doing that, as most people will know, if they've had a revised offer, it has to go through the credit process again. And if the credit process is changed and the lending policy is changed, then the new offer will reflect the new lending policy, which is really hard. And again, this is where if you aren't using a broker, then you will just go directly to the lender and the lender will come back with a new offer. But if you used a broker and said, look, I need to go to 14 months, we would then find out what the implications of that would be and then report back, and you can decide, actually, can I do it in 12 or do I want to change the terms to get to 14?
Yeah, I mean, that's a really good takeout, that is, you know, that if you are wanting amends, you're going through that whole credit process again, your costs will change.
Yeah,
you know,
they will if the lender's policy is changed, then it will change.
I think that's it. I think we're done now. So I just wanted to say thank you ever so much to Michelle from Peritus Finance. All the details are below. So if you need to get in contact with her, she'll more than happy answer any of your questions for you if you've got anything further. But I just wanted to say thanks again. Fantastic.
Thank you. Thanks for having me.
See ya. Bye.
Thank you. Bye.